All right, guys. So Snap is currently at 1635. So we're going to be doing the earnings report. The earnings call is at 5 p.m. Eastern Standard Time. Give me 1 second. We're going to get some music up. For whatever reason, they deleted my music. Let me make sure I'm getting this right. Hold on 1 second. Make sure I'm not. Caps lock. Give me 1 second, guys. And we'll get the music running. We have some music. I think YouTube will show us at least. What's up, Camilo? ADXN, man. Yeah, ADXN is crazy. Tesla up over 800s. Let me put some music on just for the time being. Let me know if you can hear it. You should be able to hear it. There we go. All right, that's better. All right, now I can turn off the StreamYard music and play my actual music here. Might be a little loud, so bear with me for a second while I turn it down. There we go. All right. Got my email up. The other thing I need for this profile. All right, guys. There we go. Snapchat up to 1630s. Are you bullish or bearish on Snap? Tell me about it. Let's see. Hit the like button if you haven't already. Yeah, SPY's been moving up all day. Big movement on the SPY as well. Here's the SPY. SPY up to 397s. Choppy open. Choppy open. We'll see if it continues. Let me know how the music is. Is the music good? Can you hear the music? I guess is the first question. Can you hear it? Let me know. You should be able to hear it. All right, we're doing a poll real quick right now. Bullish or bearish on Snap earnings? Let me know. Snap bull or bear. We got the poll live. We're also going to do a Twitter poll here if it lets me log in, that is. There we go. There we go. Nice. Going to do a Twitter poll as well. Same poll. I think that's what matters the most right now. Snap bull or bear. We're going to make this one short. About what? 2 hours, 3-hour poll. Snap is pushing up with the market broadly right now, and we'll see if it holds. Again, we're going to do our poll. Let me know if you're bullish or bearish on this. Everything's set up now. Snap is my only one green trade. Hey, nice. Are you serious, bro? Did this thing really just reset? Did Twitter really just reset as soon as I went to it and eliminate the whole poll I just did? I don't think it posted. Yeah, it doesn't look like it did. Okay, fine. Yeah. All right, let's go ahead and tweet something then. SPY's up to 397.60s as we speak here. And we're also going to stream the entire earnings call as well. So be ready for that. Going back to 1630s. Let's see if 1625 is a bounce level for Snap. We'll see if 16.5 is a bounce level for it. All right, we got our poll on Twitter is live. It's time. Snap earnings, 4 p.m. I had about 17 minutes or so, 17 minutes. Let me know if you're buying calls or puts on Snap earnings. Again, we're going to be covering everything live as it happens. Here's the link. Vote on the Twitter poll right there if you want to check it out. What's up, Adrian? Toot, Jay, Truck. Snap is my only green one today. Hey, green is good, brother. Green is good, man. Let me go ahead and share this everywhere else. Got to sign into my Discord too. We're in our Discord as well. Snap is popping up. What else is moving right now? And how much do you think Snap is going to influence the market too? I guess is the real question. DJing with the calls, YOLO calls. Hey, vote on the poll. Got Netflix and Tesla right. Hey, what's up, DS? All right, guys, 16 minutes. 16 minutes. We got 14 votes, and again, we're 50-50 split on the polls for Twitter here. If you look at the poll we just did on Snap earnings, in about a minute, we got about 14 votes, completely 50-50 split. And so, again, we posted the poll link. Vote on the poll if you can. And market's ripping up. Snapchat, if we look at it over like a daily chart here, it's been pretty beat up with the overall market. It was at $83 back in September of last year, and it's currently at 1630s. And so is this a value buy right here, considering the potential oversold nature of this chart? Is this a value buy for you guys right now? Is there a value? Is this a value buy? Let's see, but here's Snap. Market's pushing up. We got the highs of the day around 398 or so. For the highs of the day, right around 398. Closing bells in 15 minutes, guys. 15 minutes. TBLT. What's TBLT doing? We can take a look at it. TBLT flying up. A big short squeeze candidate today. You can see kind of the U-shaped breakout pattern. And this one is down to 560s, 565s or so. And again, we're going to be streaming the entire earnings call for Snapchat as well. So yeah. see how it goes. SPY up there to 397.70s. So yeah, let's talk about it. So we got the full earnings call. Full earnings call is going to be released after 4 p.m. Eastern Standard Time. We'll cover what the report stated. Remember, we're not market. For losses, good luck. Hit that subscribe button if you can. We're also going to do the earnings call. Starts at 5 p.m. Eastern Standard Time. Yeah, hit that subscribe button, guys. My Tesla 740 call option now up 220%. Best play for me so far this year. Hey, congrats, Joshua. Yeah, great call, especially when you consider where Tesla is at right now. Great call. It's currently over 815s here, so just great call. Should be rolling in money right now on that option. And so nice work, man. Again, we got 23 votes already in the last 3 minutes on the poll we just did on Twitter. And so be a part of that. So far, 56.5% said calls and 43.5% said puts. So yeah, we'll see what we get. It should be a fun earnings call. Tesla over 815s now. What do you want to watch else aside from Snap? We can watch the SPY. We can watch the Q. Let me know. Hey, what's up, Vincent? Hey, what's up, JB? Snap, July 22nd, 22, $18 call, 18 strike price call options at 91 cents, so about 91 bucks. Even though they're out of the money, I'm sure you're still probably up nice on those as well, right? So, hey, nice work. What's up, CC? We appreciate the love, guys, for sure. Again, we'll get more people here. We usually get a couple hundred people at least for these big earnings calls. And so today we got Snapchat, and then tomorrow we have, what's the big one tomorrow? Twitter earnings call is tomorrow. So Twitter earnings are going to be announced tomorrow morning, I believe, on Friday. And then we're going to be covering that earnings call as well. So that should be good too. SPY, yeah, here's Tesla. Tesla over 815s now, looks good. SPY edging closer to that 398 high of the day. I think the big psychological level that most people that are watching the SPY are watching is $400. I think it's just a big psychological level that, people are going to pay attention to and react to when we get close to it. And so, yeah, we'll see, but hopefully it goes well. We got about 10 minutes before the closing bell. Usually the earnings report is going to be released sometime after the closing bell. Usually it's like 5 to 10 minutes after the closing bell. Sometimes it's longer. Sometimes it's right. When Netflix dropped earnings earlier this week, they dropped it right at 4 p.m. And so literally as soon as 4 p.m. hit, every news source in the game had the Netflix earnings and reactions, and stock market was moving from it. We'll see what Snapchat does. I can't remember what Snapchat usually does for their earnings, like when they usually report it. I don't think it's necessarily like a uniform time. I think it's just kind of randomly, but y'all can correct me if I'm wrong there. 100 shares of Snap at 1624 in our Discord. Let's go better than the last quarter. Horrible guidance. Yeah, it'll be interesting. We'll see. Snap up to 1640s right now. SPY just broke highs of the day up there at 398s, 398.10s, 15s. Got up to 398.19 here. So we'll see if it holds over those spots too. Hey, my man. Will the euro rate hike impact the U.S. markets tomorrow? I think they affected the market short term today when the ECB interest rate was announced this morning at what? It was like 8:15, right? 8:15 market time. And so I think the market already to a certain extent reacted to it, but I think it'll probably react more to it tomorrow. Right now the SPY is up, and so I think the real question is, does the market hold these gains? And we'll see. I appreciate the $2 FM. Thank you, brother. I appreciate that, man. Hey, what's up, Pawn? In chat, let me know. Do you think the European rate hike impacts the U.S. market tomorrow? Do you think it's already impacted it today? I know we got the data really early this morning, and so I think a lot of people have already reacted to it in the stock market. But we'll see about the European markets as well, how that impacts it overnight. Snap up to 1640s right now, just broke high of the day as well. Closing bell is in 9 minutes, so Snap just broke highs of the day right before the closing bell, and the SPY just broke over 398s, which was a previous resistance area that was double topped on a 1 minute chart. You can see both of the tops here right around 398 in the last like hour or so, maybe the last like 30 minutes. And so we broke over that resistance here. You can also see like an ascending trend line, but let's see if we hold over 398. Yeah, a lot of people call it out TBLT today. I know that thing had a ridiculously huge short float. It's got like 120% short float. And so there's TBLT. It's at 560s. A lot of people making money with this one. Again, you can see the U-shaped breakout, which is just a powerful pattern. And you can see it on TBLT right now. And then especially when you consider the massive short float potential squeeze, here, it's really interesting for a lot of different people. I've definitely been watching it. We've had a lot of people call it out in our chat. And U-shaped breakout, held VWAP really nicely, ripping up towards highs. I think we should pay attention to like 575 right here, which is a psychological level as well as close enough to the high of the day. And then 550 underneath us to see if we continue to hold support there before moving back up if and when. Snapchat up to 1645. Let's see if it rejects under 1650 or if it can break that area here. Here's Snap highs of the day for Snapchat at 1646. And so, let me know what you guys are watching right now. Earnings are going to be out in about 8 minutes. Trying my luck here. Bought some $17 Snap calls. Hey, good luck, man. So, yeah, we're over the high of the day for TBLT. We are over that high. ADXN had a lot of people talking too. Yeah, I remember a few people seeing this one this morning. Heard some people talk about this in our Discord. Ripped all the way up to 250s. So held really nicely. Ripped over 250s. Held the VWAP really well. Hey, what's up, LP? What's up, man? And yeah, Snapchat just tapped 1650. Let's see if it breaks. Snapchat just broke 1650s here. 7 minutes left. So Snapchat did break over that 1650 level. Let's see if it holds support at that area now. I think we have to pay attention to the broader market as well. I think that's certainly going to be influencing Snapchat, and most mid to large caps are going to be affected by the overall market. And so, yeah. Snapchat over 1650s, guys. Over 1650s. Calls. Gaga says calls. Let's look at the Twitter poll again. Again, 36 votes on this Twitter poll currently so far. We got a little bit under 60% here. You can see the polls here. Out of 36 votes in the last 11 minutes, we've got about 58% thinking calls here. And then we've got about 42% saying puts. And so, yeah, we'll see what happens here, guys. Yeah. Again, give me a follow on Twitter. Snap 20 cents. Oh, 20-cent earnings calls is what you're saying. Snap 20-cent calls. Okay. Hey, good luck, HM. Under 1650 now for Snap. SPY is up there to 398.20s. About a couple of puts. Hey, good luck, Eddie. Can we hit 17 after close? We'll see. Possible. Let's look at like 1640. So we just rejected under 1650 here, guys. Pre-bell. So we did reject under 1650s. SPY pushing up over 398.40. Just broke highs again. Yeah, earnings are out in 5 minutes. Gagan, 5 minutes. Music should be good, right? Let me know. Big pullback pre-closing bell for Snap at 1640s. Snapchat dipping down here at 1630s right now, 1630s. I'm trying to look at the market cap for Snap. Market cap for Snap is about 25 billion. So not necessarily a small, a huge cap stock, but not really a small one either. So yeah, Snap SPY breaking highs at 398.60s. Snap all the way, uploaded up. Hey, good luck, Curtis. Yes, sir. Market cap about 27 billion. Yeah, I'm showing 20 or whatever. Let's see. Yeah, I'm showing 25.5 billion, but data is not the most accurate anywhere. But yeah, we got a lot of stuff up, so we can figure out what Snap earnings. So stick around. We're gonna report the earnings as soon as they drop. We're also gonna stick around for the actual earnings call. And we're going to stream that live here as well. SPY up to 398.60s. So we're watching that. Pushing up. We got about 3 minutes until the closing bell. And then sometime after that, the earnings are going to drop again. Usually it's 30 minutes or less. Usually it's like 15 minutes or less. But it'll give us a little bit of opportunity to watch what happens. If you want to buy like broad market options on exchange traded funds, you can. 15 minutes after the closing bell, up to a maximum of 15 minutes after the opening bell. So we'll see if it influences the market enough to make that a justifiable trade to get in. Snap is at 1640s. Yeah, I mean, I tend to be pretty bullish on Snap. I think it's pretty extended on the downside. I think it still has a ton of users. The daily active users, I'm pretty sure on Snap is very high. What was their DAU last time? Daily number of Snapchat users at the end of 2020 was 265 million. And the Q1 of 22, it was 332 million daily active users. So Snap is still incredibly strong as a company. I think Snap's problem is monetization. How do you monetize Snapchat? And I know they found ways, and I know you can monetize your Snapchat, and there's premium Snapchats, which I think is probably the only move they can make there. But yeah, I mean, it's cheap. It's at 1640s per share. Long term, I know social media has a trend-like nature of them where sometimes they're trending well, sometimes they're not. And, we'll see Snap bouncing over 1640s. The second they say they lost users, it's going to dip. We'll see, man. We'll see. All right, guys, less than a minute before the closing bell. We're going to put all our different news sources up so we can see what the Snapchat numbers are as soon as they happen. Get ready, guys. So we're pulling back on Snapchat. SPY is at 398.60s. All right, so here's the closing bell. Hey, what's up, SPAC? All right, so here's the closing bell, guys. Good luck. SPY ripping up. There's the closing bell. Let's get ready for the earnings. Let's see when they release these numbers. Again, waiting here, not saying anything yet. Mattel reports earnings, I believe, as well. Again, waiting here, nothing yet. No broad reactions on Snapchat. It's at 1640s past the closing bell. Yeah, good luck. SPY up to 398.90s heading into the closing bell. Yeah, Mattel reports as well. And so down to 1639s for Snap. No numbers out yet. Not that I see, at least. Checking all the different platforms. Nothing yet. You'll usually get a big pop as soon as the earnings are actually out. So they should be out anytime. The actual earnings should be out anytime. And waiting on these here. 1640s for Snapchat, 1640s. All right, 1640s, guys. Snapchat should drop earnings anytime now. Anytime. Still waiting, nothing yet. Hey, thank you, Pawn. I appreciate you, man. Snap up to 1645s, 1647s. Again, nothing really yet. Not seeing any volatility from this to indicate that the earnings are out. We're still waiting. We're going to drop them as soon as they come here, guys. So just bear with us. Snapchat up to 1650s, about to break the high of the day at 1655 here. Maybe if this is foreshadowing good earnings, just broke highs at 1655. The new high of the day is 1661 for Snap, and it's still pushing up to 1665 is the high of the day now. SPY actually dipping down a little bit in the last few minutes. Big pop up, so the earnings are almost certainly out now. I just got to wait for them to show up on the different platforms. But Snapchat up to 1710 as the earnings are released. Again, just waiting for all these platforms to catch up. Again, Bloomberg Terminal is probably the only people getting it now. Nobody has data yet on it, so nothing yet, nothing yet. Oh, it's moving up, so I'm assuming it's an earnings beat, but that doesn't necessarily mean they're up yet. They're not out. They're not dropped on any of the major platforms, Big Zynga or Thinkorswim. So no earnings are out yet. I can check Twitter. Let's see if somebody reported these early. Okay. Snap losing 18 cents per share. Snap is minus 0.18. So they lost 18 cents per share. I don't know what expectations were. Still nothing out yet. And it's possible that they just didn't drop. Still waiting. It's got some volatility here. But it doesn't look like the actual earnings for Snap are out yet. Waiting for the stock to move. Again, if you guys have earnings from anywhere, let me know, but I don't think they're out yet. Big pop, still kind of sideways, so maybe somebody was just loading up on a sizable position. Again, we're still waiting for the numbers to come out. Nothing yet for Snapchat. At least not that I'm seeing. Again, we're checking TOS. We're checking Benzinga. We're checking Earnings Whisper. Nothing's out yet. And so it looks like maybe that was just somebody taking a sizable position with not actually, without it them actually being out yet. Okay, so the EPS estimate for Snap actually was minus 18 cents per share. So that's just the estimates. We'll see if they do better than that. So the estimate is for minus 18 cent per share for EPS, which is profitability guidance. There's 1660s here. Again, waiting on the Snap numbers. Yeah, somebody just bought a big position here is I guess what it looks like. The SPY is actually dipping down some. And again, we're waiting on the Snap earnings. We're going to report them as soon as they come out. IMPX says they're out at 410. So yeah, we'll see. We got about 5 minutes. Again, hit that subscribe button. We'll see how we do for earnings today on Snap. Yeah, I checked a bunch of places. A lot of people thought the earnings were out yet, but looks like somebody was just buying some big size. Yeah, hopefully in 6 minutes. You got 1650 call options. Hey, good luck, bro. All right, we're at 1650s. Snapchat mostly break even post earnings. The SPY itself is down to 398.60s or so. A lot of people saying they got $16.50 to $17 call options. Hey, good luck. Up to 1660s now. Still waiting on the numbers, nothing yet. I've thought 5K shares of Snap at 12.18 a share. Need some good news. Hey, well, you're already sitting pretty good, bro. You know? What the heck? Dude. Okay. 1630 buy order open for Snap. I got 50 $20 strikes. YOLO. Hey, good luck, Carlos. Honest Harry buy order. If it has good earnings, the setup is there to fill in the gap. $20 call options. Hey, let's go, Eddie. Good luck, man. Snapchat at 1659s right now. 1659s. Midway the drop before of 25 and today 16 average. Hey, well, good luck, man. You still got some room. Yep, nothing out yet for earnings. Again, we're going to drop them as soon as they come out, guys, so just bear with us. Snap options are getting IB crushed, 70%. Good luck if you didn't play calendars. Options priced in a 17% move. We're at 1660s right now for Snap. Very nice. Got my sell order filled at 1709. Were you bullish on Netflix? Yes, but I didn't actually play it. So like I was bullish on Netflix. If you guys heard me, like I streamed the morning of Netflix earnings, and I told everybody that considering how extended on the downside Netflix was, that I assumed that Netflix would do better than expected, or at least have a positive reaction. But I actually played the other side, and when I looked at the option chain, I saw puts were like $60, and then calls were like 170, and so I ended up buying puts just out of sheer value price. And I ended up selling for like a $10 or $15 loss. It was very small. But if you heard me that morning on Netflix, I was saying I thought Netflix would go up. I just thought it was too extended on the downside. I think Netflix actually has some pretty good content. People dislike them for political reasons, and I understand and all that. But I think Netflix, the Adam Project was good. I liked it. You know, there's some good Netflix exclusive content that they have. So I think I think Netflix is fine. They're still a beast of a streaming company, and they certainly influence the market. So yeah, if you want to join our Discord, there's the Discord link in chat. Again, we're going to stream the entire earnings call here as well, so you can stick around, watch the earnings call. We're going to watch the stock market reaction to it. Doesn't look like Snap has dropped anything yet. Still waiting. What's up, Smile? We're just kind of kicking back, waiting for these earnings to actually come out. So Mattel did drop their numbers here. Mattel put in second quarter EPS of 18 cents, net 66.4 million, adjusted EPS of 18 cents, second quarter sales of 1.236 billion. Back sales view 8 to 10% growth, adjusted EPS of 142 cents, profit per share, EPS of 148. So yeah, looks like Mattel did well. Are they reacting positively to that? All right, there's a big drop. I'm assuming Snap earnings are out. Yeah, big drop for Snap earnings. It looks like an earnings miss, at least initially from these results so far. Give me 1 second. Okay, so Snap put in second quarter daily active users are up 18%. Daily active users is up to 347 minutes, but they did post a loss per share of 26 cents, which is higher than the 18 cents that was expected. An adjusted loss per share of 2 cents. Loss of 422.1 million in the second quarter. Revenue was 1.11 billion. And so again, the numbers are out. It was an earnings miss for EPS specifically. They predicted 18-cent loss per share. It ended up showing, 26-cent loss per share for EPS. They did report that the daily active users is up 18% to 347 million. And so the numbers are actually out. Was So yeah, the again they posted worse than expected results. Bear with me, we'll drop all of it pretty soon. All right, so here's the actual numbers for Snap. Second quarter EPS of 2 cents, missed the 1 cent estimate. Sales of 1.11 billion, missed the 1.14 billion estimates. A lot of stuff to go over here, so just give me a second. We're going to organize it and show everybody this. Again, daily active users are up 18%. Their daily active users are now greater than 347 million. Snap second quarter loss per share of 26 cents, adjusted loss per share of 2 cents. They expected 1 cent adjusted loss per share. So a little bit worse than expected. Not by much, though. They're almost a profitable company for Snap, which, you know, yeah. So those are the numbers. Again, a lot of stuff to report here. Snap says that they're not providing expectations for revenue or adjusted earnings before interest, depreciation, taxes, and amortization. So they're not posting EBITDA or expectations for revenue. Daily active users is up 18% year over year to 347 million. So yeah, put in an earnings miss. It wasn't a huge one. It wasn't a huge one, but they did miss by 1 cent. We're going to post all of this here. Give me a second. And Snap is reacting negatively to this, down to 13 cents a share from this earnings miss that they just posted. We're also going to put the full thing here. We're going to give you a document at the great bottom, or at the bottom of this, for everything that's kind of going on. They also said that they are forward-looking visibility that remains incredibly challenging, unclear of how second quarter headwinds will affect the stock through the third quarter. They said that they will substantially reduce the rate of hiring and implement a strict reprioritization of goals and initiatives. So this doesn't sound good for Snap. Sounds like they're nervous about the future here, specifically the third quarter. And so we're going to post all of this here. And again, we found this out through Benzinga, and so we're going to post the Benzinga credit there. But yeah, just read the scroll at the very bottom. Here is the full update on Snap. And again, they authorized a stock repurchase program of up to 500 million of Class A stock. They authorized. Oh wait, we did that twice. Hold on. There we go. So yeah, they authorized the stock repurchase program of up to 500 million of Class A. Snap says that they're not providing expectations for revenue or adjusted EBITDA for the third quarter, and they said that they're going to substantially reduce the rate of hiring and implement a strict reprioritization of goals and initiatives. So yeah, that is what's causing Snap to drop. I don't think the earnings were that bad relative to expectations. I think they only lost 1 cent more than expected for the second quarter, but I think the real bearish sign here is their apprehension for the third quarter. I think they're nervous about what's going to happen, and so they're going to stop hiring as much. They're going to reprioritize goals and initiatives. They're not providing expectation or revenue guidance for the third quarter, and yeah, they authorized a stock repurchase program of up to 500 million of Class A stock. Second quarter EPS again came in as 2 cent loss per share, missed the 1 cent loss per share estimate. Sales of 1.1 billion, missed the 1.14 billion estimate. So all around, these are bad results for Snapchat. Bad results. Again, they missed on EPS, which is profitability. So Snapchat missed on EPS. They weren't as profitable as expected by 1 cent per share. And I mean, I think we can give them a little bit of, room for that. I think that's fine. But when you add into account the revenue miss of 1.1 billion, or the sales miss, of 1.11 billion, missed the 1.14 billion estimate. It's not that great. The silver lining in this is that their daily active users is actually up 18% year over year to 347 million. And so if there is a silver lining in this earnings report, is that their DAUs are up. Their daily active users is up to 347 mil. But aside from that, it sounds that they're nervous. about the third quarter. Oh yeah, Santiago. Crazy how last time the Snap picked up the Q and now it's crashing. Yeah, man, Snap down at 397.60s. So it's not really looking that great for Snap. Hey, y'all do me a favor, hit the subscribe button. We're dropping this as soon as it happens, letting you guys know what's going on. And yeah, if you appreciate free trading content, we don't try to sell courses or anything like that here. We just give everything away for free. Hit the subscribe button. Meta lost a lot. Snap with a disaster. Dollar cost average tomorrow, LL says. Yeah, if you bought puts beforehand, you're looking good right now, man. Worst thing here is Snapchat will take down Facebook, WhatsApp, and other apps like Twitter. Twitter earnings are tomorrow. That's going to really influence everything. So remember, Twitter earnings are tomorrow morning. Yeah, be careful, guys. Snap is crap. Yep, Meta getting crushed. Look what you can do with Snap other than chat. Seriously? Yeah, but that doesn't necessarily mean it's worthless. I mean, I understand. Listen, you got 364 million daily active users, 346 million. You're not doing bad, you know. I think Snap's problem is what it's always been, which is it's hard to monetize its business model. It's a software, and it's hard to monetize it in the way that they want to. Unlike other social media brands, Snapchat is hard to monetize, you know. Yeah, and we're still dropping. We're down to $12. SPY dropping. Here's the Q. Tech heavy Q's dropping down with Snap down to 305s. Here's Meta. Meta's tanking down with Snap. You know, so you can see Meta falling with it. Snap is down to $12. I think Meta and Google have a lot of ad income, and looks like Snap was terrible in that area. Yeah, it's harder to monetize Snap. Maybe the call will make it go back up. We'll see. I kind of want to buy this dip. I mean, it's pretty extended on the downside now. It's a pretty brutal drop. I think I will buy this dip. All right, we're in 25 shares. I think maybe hopefully the doom and gloom is done and I can ride a little trade up here. We'll see. Meta, Google, Snap, MU, everything red. Yeah, SPY red, Q red, Meta red, Facebook red. Tesla at 812. Well, the whole market's dropping right now. Snap has probably affected a lot of different things. Q is down big. Google down to a 112s. I didn't expect Tesla to run so high. Suspicious. I think the earnings call went as good as expected, and so that's causing some upward action in Tesla. 1190, 52-week low. Yeah, it's probably a good time to buy it, right? Yeah, we'll let it sit here. See how this does. Maybe the earnings call, they'll say some good stuff. Kind of an overextended dip buy here is what I'm kind of trying to get involved with. We'll see if it works. Q down to 305s, right around that 305 level. Netflix down to 221.80s. SPY down to 397s. Well, max pain on the SPY expected tomorrow is 393. Maybe we'll see that. Possible, I guess. All right, guys. So now that the Snap numbers are out here, and we're pretty mixed on the bullish or bearish from Snap earnings, the next question we're going to ask is, are you buying the Snap dip? Are you buying up the Snap earnings dip? Yes or no? We just did the poll. Let us know. Wondering how much of this is related to slowing down economy. I don't know, man. I think whenever your daily active users are up, but you put in an earnings miss. Again, I don't think their earnings were terrible. I think they did miss in both EPS and sales, but they were slight misses. And I think the main reason Snap is down is because of their expectations for the third quarter. They seem a little apprehensive there, and I think that's easy to pick up on in all of this. If you really read this, they authorized the 500 million repurchase program, but they said that they're not providing expectations or revenue for the earnings before interest, taxes, depreciation, and amortization for the third quarter. So they're not providing guidance there. And they also said that they're going to substantially reduce the rate of hiring and implement a strict reprioritization of goals and initiatives. That doesn't sound good or optimistic, and so I think because of that, they're nervous. And, in turn, this is kind of what we're getting. Because we bounced back so quickly, we're going to take a little piece off of this. There we go. And we'll hold the rest. Let it ride. Maybe add some more too. Bye, Snap. Look at any advertising on Snap when they want to earn some money means less users. Yeah. I mean, I try to tell people here, for instance, right? Like anytime I plug anything, I lose 20 viewers. You know what I mean? And so we still plug things, of course, because I mean, we're a free channel. And so we got to subsidize ourselves through advertisements naturally. But anytime I plug anything, I lose like 10 or 15 users, and that's just the nature of the game. Anytime you plug anything, in the end, the real ones understand like you got to make money and you're going to just like commercials, like, you're going to plug stuff. But yeah, Snap, I think it's just hard to monetize. And the business model is hard to monetize. You know what I mean? All right, guys, we got about 38 minutes into the actual earnings call, which again, we're going to stream live. Google earnings. Next week, we got a bunch of good earnings, man. Next week, we've got, let me see. I know we have tomorrow's Twitter. All right, we got yeah, man. Next week we got some big earnings, bro. Monday, there's a list of them. Let's see if we can rank it by market cap. Yeah. Nothing really big Monday, but Tuesday is when the big ones. Tuesday, we got Microsoft, Google, Visa, Coca-Cola, Texas Instruments, Starbucks, General Motors, and a lot of other stuff. And then Wednesday next week, Snapchat pulling back, rejecting 1250s. Wednesday next week, we got Meta or Facebook, QCOM, Boeing, Sherwin-Williams, a lot of other stuff, Shopify. And then what's Thursday? Thursday, we got Apple and Amazon. So, I mean, big week next week, specifically Thursday, really. Those are the two big juggernauts earnings next week. But yeah, market's dropping. Snap is down to 1225. We'll see if it bounces off of 12. Previous low of the day now is at 1180s for Snap. Yeah, and the Fed meeting next week. Oof, crazy week, man. It's going to be chaos next week. I'm ready for it, bro. It'll be fun. Thoughts on Bitcoin? I like Bitcoin. I believe in Bitcoin long term, but short term, I think it's vulnerable to volatility. Best way to put it. Over 23,000 now, which is great. Back over 23 now, which is great. Snapchat bouncing back up to 1250 here. We're still holding our piece. Looks like that dip buy was the right move. Out of 109 votes, are you buying the Snap earnings dip? 31% said yes. 69% said no. Out of all the people on Snap, 62% said calls and 38% said puts. And so looks like 38% were right. I'll buy Snap for 6. STX, Bank of America, or Snap. I don't know. What do y'all think? BOA or Snap? Different businesses. I trust Bank of America more long-term than Snap. I think any social media company is going to be vulnerable long-term because of how trends change and that type of stuff. Look at the last 20 years and look at what social media companies are big. And I think this is not including like Google I think Google is immune to it because they're just so big. But Bitcoin also dipping. Bitcoin actually moved up over the last few hours. Bitcoin back over 23K. Snapchat consolidating here. And again, let's see if we bounce off of like maybe 1225 for Snapchat. If Fed want to increase more than yes, buy. Snap looking like poop. What's up, Joe? Yeah, well, I play extension. And so the question is Snap going to go to zero? And if not, where do we bounce? Where do we bottom out at? I think it's the real question. Let me know what you guys think. Twitter is a tech stock, so it's going to be sympathy moving with this. Same thing with like the Q, everything else. Apple, Disney, whatever. They're probably all down with the market and with Snap. Snap posted a second quarter earnings miss in both EPS, so profitability, and sales. Their daily active users were up, though, to 347 million. But again, the real reason Snap is down like this is not because of the EPS miss. It's more so because Snap is apprehensive long-term and skeptical long-term about their business, specifically in the third quarter. And that's scaring everybody. That's why the drop is so profound right now, is because, again, if you read what they said here, they said that they are not providing expectations for revenue or adjusted EBITDA, which is earnings before interest, taxes, depreciation, and amortization for the third quarter guidance. So they're not providing that. And they also said that they're going to substantially reduce the rate of hiring and implement a strict reprioritization of goals and initiatives. Again, that doesn't sound bullish to me. It seems like they're skeptical for the third quarter, and I think people are reacting to that. And that's the drop we're currently getting right now. And again, y'all can correct me if I'm wrong, but I'm pretty sure that's what's going on. I mean, they also missed in both earnings and sales, and so that's not good either. And I guess it's we could speculate on it, but yeah, I don't know why they got to provide guidance. They don't want to. In the end, like the reality of like, there's a fine line for these companies, right? Because if they just fool people and they don't report that stuff, and then the third quarter is like bloody, then people are going to get mad at Snap and they're going to be less loyal to Snap, right? But if in Snapchat's mind, you got to think of it long term. It's a long game. They're going to say, okay, well, if we're honest with people about it and we tell them, hey, look, we're skeptical about the third quarter, people will appreciate that and may be more willing to hold long term. It's probably like they're thinking there. At least that's what it seems like to me. But yeah, Mattel bouncing up. Mattel had pretty good numbers, I think, right? Or no, Mattel did not. Mattel's still green on the day, though. This previous closing price right here at $23.50 is interesting to watch. And we'll see if it bounces up. 23.60s right there. We got about 30 minutes. And again, we did have the Mattel earnings. I can report those here as well. All right, guys, snap back up to 1220s here. Let's see if it holds. 1225 seems like a big psychological level. We'll see Mattel up to 2360s. It's really a scam crap company. It's not a scam crap company, Geo. And again, I'll explain why. It's because they got 346 million daily active users, bro. And so they're just a social media company that have a really high user amount. And so it's not a scam, for the same reason, like we're not a scam because everything we do is free. We don't sell anything, but you can disagree with buying their stock. You can disagree with the future outlook of the company, but you can't. It's not really a scam. They got way too many daily active users for that. It's hard to monetize as a business, I think, and so maybe a public company might be vulnerable in that regard, but doesn't mean it's a scam. ECB raised rates today. The interest rate decision was today, and they raised rates. What was it? It was 50 basis points today, right? Seriously, chat only. It is just a chat. But listen, but my point is, GOG, is that if 346 million people use them for that chat, they're still valuable. I mean, it's still obviously, people know what it is. It's not like a scam is misleading people. People know that Snapchat is just a chat and they still use it. Apple ruined their business with their privacy updates, so they've been on struggle. I think everything's mostly following the market. 0.5 basis points. Hey, you think NASDAQ will start crash from today? What do you think about $800 call option on Tesla? Well, what's the time frame? 84 to 12? Yeah, you are done. Well, I think it depends on the broader market. I think you got to look at the entire market and correlate that with what happened in the chart for Snap. Yeah, I mean, Telegram has been growing massively over the last year. I used to speak, like, as a YouTuber, I used to speak with, like, sponsors and affiliates through WhatsApp. And now I don't use them at all anymore. Now I use Telegram. Telegram's really gotten big over the last, like, year or so. It used to be WhatsApp. Now most of the sponsors are reaching out to me through Telegram now. So Telegram's gotten big. I wonder when they're going to go public. Snap is up to 1220. Or does somebody own Telegram? Hey, hit the subscribe button, guys. Hit the notification bell. We do this live for free every day. Take the time, hit that sub button. We're going to stream the entire earnings call here as well. What's up, Cap? Yeah, but that's a big audience, yo, bro. That's a big audience, dude. All right, snap back up to 1230s, over 1225s here. Again, we did buy it down here. Our entry is 1193, so we bought it down here after this dip. And I think we're just gonna hold it. Hopefully they don't say anything bad during the actual earnings call. Snap $17 call disaster. Hey, I'm sorry to hear that, Joshua. Yeah, man. I mean, just bad luck, bro. All right, so I see ex-Coinbase manager was arrested in an insider trading scheme. Apparently, he leaked info to his brother about buying tokens prior to them being listed on Coinbase. Yeah, it's insider trading. Snap at 1225. Let's see if it actually holds. All right, guys, snap back up to 1233s. And again, stick around. We got 25 minutes before the full earnings call. No, Snap is live, bro. STX earnings miss. Man, I hear a lot of people talking about it. Let's talk. Huge drop for Seagate. Seagate dropped down to 74s. We'll cover these earnings too. Let me see what they are. So Seagate dropped pretty bad numbers too. So Seagate showed first quarter sales of 2.35 to 2.65 billion versus 3.03 billion estimates. So pretty big first quarter sales miss. Adjusted EPS of 120 to 160 versus 227 estimates. So yeah, miss all around for STX. Fourth quarter adjusted EPS missed as well at 159 versus the 192 estimates. Sales of the fourth quarter came in at 2.63 billion versus the 2.78 billion estimate. So yeah, STX missed on everything. Yeah, man. STX halted after a big drop, quick drop. People are saying Meta down to 175. Are y'all buying this dip? Let me know. A question you would want answered during the call. When do you think Snap will show a profit and maintain profitability long term? When do you think that is? When are they going to turn that corner? They're still losing years after being listed. So when are they going to be actually profitable? And, what is that going to look like? Yeah, big misses for Seagate. Big drops too. 1230s for Snap. 1230. Seagate down, or Meta down to 174. Earnings for Meta on the 27th, Wednesday next week. I don't know, man. Facebook might be a thing of the past, but they own Instagram, which is certainly not, And so if they own Instagram, then, there's a chance for them to succeed long term. It just depends. So buy the Meta dip. I kind of want to. I bought the Snap dip. It worked out for me. So I kind of want to buy the Meta dip. All right, guys. So Snap down to 1225, Meta down to 174s. All right, guys. Snap down to 1215s. Again, the earnings call is live in about 20 minutes. Down to 1215s. Let's see if it holds 12s, and let me know if you think it will. All right, bouncing up to 1220s here, guys. Bouncing up to 1220s. How long do you think they'll keep adding free features onto Snap in the US before they monetize it there? Can y'all not hear the music? Oh, damn. My bad, guys. We got some music here. I've been listening to music this whole time. Music's not playing, bro. Damn, dude. It's probably more awkward than I thought. Facebook has big plans, big investment in virtual reality. They're selling visors. They're in transition. Yeah. There's a lot to think about. Could Insta Facebook split and let one so the other survives, because why carry weight in the metaverse is not going to be a thing if it's just not. Well, the only thing that Facebook really's got going for it is Instagram. You know, Facebook, nobody uses Facebook. I mean, I use it because I'm old, but like nobody else does. You know, the only people that use it are people that are over, I would say over 30, use Facebook. Once those people get older, they're going to use it less. And so that's not good long term for Facebook. But they do have Instagram, which is widely used. But social media companies do have a, what's the best word for it? There's vulnerabilities for social media companies, because very rarely does one stay successful at the top long term. You know, usually another small one comes up, and you know, everybody kind of leaves the one social media platform for another and kind of jumps back and forth, or not back and forth, just jumps from platform to platform with social media. And so I don't think that's good for Facebook necessarily. Yeah, I had MySpace. Top 8 was cutthroat, man. Booting everybody out there. Yeah, they put 10 billion, I think, in the metaverse, and didn't do much with it. Again, y'all do me a favor, hit that subscribe button if you haven't already. We certainly appreciate it. $12.20s for Snap, $12.20s. Again, we got the full earnings call in 15 minutes. Yeah, TikTok came in, basically destroyed everybody, bro. Everybody's sitting there like, damn. Well, 8-second videos are destroying other social medias, man. And that's kind of how it goes, man. That's the nature of it. And so that's what I'm saying. Long term, it's just risky. Speaking of Meta, yeah, they do, boss. Kids just play Roblox all day. Hey, I know, bro. I got 2 kids, man. I got a 13-year-old and an 8-year-old, bro. They're literally on Roblox and the Switch, the Nintendo Switch, and Xbox all day, bro. That's all they do. My son is like obsessed with Minecraft, so that's all he plays. He just plays Minecraft all day. Builds houses. He shows them to us. So I get it. We got Curse Forge on my work computer, so my son can download Minecraft mods. You know, he'll be watching Preston Plays. You know, and freaking all about it, man. He's about it. How do you have a 13-year-old? I mean, I'm not going to tell you guys how old I am, but I'm old enough to have a 13-year-old. I'll say that. Good genes, I guess, you know? All right, guys. Hey, Bitcoin up to 23.3 thousand, up about 3% today. When do you think Bitcoin hits 30K again? Sometime in the next 6 months to a year? Let me know what you guys think. Yeah. Oh, yeah, bro. The song on MySpace, dude, I had some... Man, I can't remember, bro. On MySpace... MySpace was like right in the heat of my teenage years, man. MySpace, I had some gangster rap, I think, on my Facebook profile. Or on my MySpace profile. You know, some like early 2000s Louisiana rap on my profile, I'm sure. Oh, dude, I'm happy for him. He can build Minecraft. ETH up to 1600s is great. That's great. Nah, my son plays Minecraft as much. I download my son Minecraft mods. Like, look. I really do. I mean, look. I was trying to delete freaking Curse Forge today, man. I got Curse Forge on this computer, which is like a Minecraft mod platform. You know, my son will watch Preston Plays, and then he'll just bug me to download the mods that he sees on Preston Plays. You know, that's all he does. I can't really get mad because like I'm on MLB The Show 4 a lot, and so you know, like father, like son, I guess. I'm already in Snap, James. Stop yelling at me. You know. I know you're not yelling, but I'm just going to act like you are. RL Craft. Okay. I'll check it out, Tori. What is that? You got to tell me what it is, though. How long until Snap's a penny stock? I don't know. I bought the dip on Snap. Let me know if you think it's a good or bad idea. Have to call him back. Where's Snap at in 3 months, guys? Where do you think Snap's at in 6 months? What's the price? Let me know. Is that a mod? All right, guys. Meta's still down. How's the broader market affected by this? Being affected by this? Here's the SPY itself. SPY down to 397.50s. Really bullish few days on the SPY. Terrible day trading activity. Just bad opening bell. Bad first hour or two of the day. It's just slow, boring, and just choppy. But the broader market is negatively affected by this as well. Snapchat at 1220. So we'll see if it holds. I actually am bullish on Snap over the next 6 months. I think Snap will be at like $20 or so in the next 6 months. I hope at least maybe not. But I think it'll probably be up. I think it's really extended on the downside right now. I think when you consider the fact that the whole market basically dropped, down under $50 a share when it was at 83s back in September. I think this is just really extended. I think they still have hundreds of millions of daily active users. 364 million to be exact. I don't think 11,000 was the bottom of stock market. Snap will end the year in single digits. All right, we'll see, Coinbase stock expectations. And I think that ultimately is going to be relative to what Bitcoin does. Where's Snap in 3 years? I think that's a harder question. I think over the next 6 months, we might have some longer term extension, but 3 years is a long time. And a lot of things can change social media trend wise in 3 years, so I'm less confident about that. Yeah, I doubt TikTok's going to be banned. It's got too many users, to be honest. It's got too many users. We'd get too much flack for banning it, I think. Snap CEO needs to go. They got good engineers. Yeah, for sure. Snap just did this 2 months ago and made 10%. Yeah, we'll see. $15. Yeah, I like it. I just want to see it hold over 12. Bitcoin's still at 23.2 thousand. Again, we got the full earnings call going live in about 10 minutes, guys. Full earnings call live in about 10 minutes. All right, guys. Snap at 12:17 now. Again, the earnings call is going to be live in 10 minutes. Again, let me know if you're bullish or bearish. Is Snap focusing more on augmented reality-related projects? I think they should. I think their software. I think their software could heavily use that. It might make it more interactive. Again, I think Snapchat's problem is that they have to figure out ways to monetize it. It is just a chat app. And while it's easy to get a lot of users in that type of app because of popularity and things, I think they need to figure out monetization strategies, because if not, um, they've been a public company for a while. They're still posting losing numbers. Their EPS, which is, again, profitability, is still down. It might be down by 1 or 2 cents per share, but it's still down, so which means they're still a losing company in terms of profitability. And so I think that they've been public long enough to where they really should consider figuring out how to really monetize their site. I think eventually the stockholders are going to get impatient, waiting for them to figure out a monetization strategy that's actually successful and will help them actually post positive earnings reports. But we'll see. Average cost of Snap is $4.85 a share. Ooh, that's rough peak. I mean, I don't know, man. Long term, they might be okay. If I'm being blunt, though, I think $40 is a little bit high. They're at $12 right now. I know the market has dropped drastically over the last 6 months with everything, outside of Snapchat, but like $40, I don't know, man. We'll see. Good luck. I hope you make money, man. I really do. Well, I think TikTok is so big that it doesn't matter at this point in time. TikTok is going like Facebook strategy, where if you just have billions of users, monetization's a lot easier. Do you think Elon Musk is going to buy Snap? I think he might after the whole Twitter fiasco. I think Elon and Twitter right now hate each other. But I think that considering Tesla stock's vulnerabilities, I think it would probably be a wise move to diversify if you're Elon. If I was him, I'd want to diversify. I think Tesla is great, but Teslas historically have been a rare sighting, and so they were kind of like a status symbol because they were rare, and you'd be like, ooh, look at Tesla. At this point in time, at least in my area, I'm seeing Teslas every day, constantly. Like everywhere I look, I see a Tesla. And so I think that, I don't know if Tesla is still going to be in a growth phase, and I think with that, diversification might be a smart move if you're Elon. But who knows? We'll see. What do you think would be the best company to buy Snap out? I think Elon buying Snap might be a good idea. I think maybe they could find some compatibility with the cars, even to where you could like play some snaps on the screen and then they delete themselves in the car. I think that would be a good use of it. But I think if anybody buys Snap, it's good. Yeah, but SpaceX and Neuralink are not profitable. SpaceX and Neuralink both have a long way to profitability. And I know somebody's going to respond with, well, Snap's not profitable either, and I understand that, but I think they're closer to profitability on Snapchat than they are on Neuralink or SpaceX. There's just a long way to go. Yeah, Facebook wanted to buy Snapchat historically. The deal didn't end up going through. I think it was the right move for Snapchat to turn down Facebook's offer as well. What's the market cap of Snapchat now? I don't let political bias influence anything. I like Teslas. Elon's a little bit too political in nature for me. I don't think it's necessarily smart for Elon to be political either. I think anytime you run a public business, if you come out really hard on one side of the political spectrum, then you are going to ostracize a large percentage. At best, it's 60-40 of your consumers. And I think that's not a good idea if you're in the car business, It's so, again, I'm not going to say I disagree or agree with Elon politically. I'm just saying I think it's a bad move to be so outspoken politically, especially in the public realm if you're Tesla CEO. Snap is at 12.10s. Let's see if it holds at 12. Bought the dip, still profitable. Already took profit in it. But yeah. Again, earnings call is about 6 minutes, guys. 6 minutes. Snapchat's about 26 billion market cap. I don't think we knew what Facebook offered Snap back in the day, but I think a lot of people are thinking that it was the right move to reject Facebook's offer for Snap. Snapchat was a 25 billion company in revised guidance and then pulled guidance CEO and execs to now it's probably 20 billion. Now, James, that's probably right, considering the drop. That's a big drop percentage wise. Why is Snap closer to profitability? I think SpaceX, I think they're years and years outside of fully monetizing their spaceship commercial flights. Years and years out. Neuralink, I think, is the same. It's years and years out of real monetization of that. And so with Snap posting 1 or 2 cent loss per share, in EPS. That means they're pretty close. They're pretty close to break even as a company. And so I think when you consider the nature of Snapchat, and when you consider that they have 346 million DAUs, daily active users, I think that's easier to monetize than the current business model of SpaceX. I guess it's subjective or arguable, and you guys can let me know your argument in chat, but that's at least my logic for it, I guess. Yeah. Too many of the Model 3s costing $60,000. Tesla's challenge is keeping that high margin while ramping up to a real mass production model. Yeah, for sure. They were up 7% at 3:59 p.m., so they are down 32% today. It's a big percentage, man. Yeah, I like NVIDIA, but I think here's the thing, right? ETH is supposed to merge. So Ethereum is supposed to merge from proof of work, which is mining, to proof of stake, which is staking, as their business, or as ETH's model. And I think whenever that merge happens, I think we might see short-term fluctuations in NVIDIA because, you know, people use their graphics cards for crypto mining. And so if we take ETH out of the equation for mining, like people aren't going to mine ETH anymore after they merge from a proof of work, which is, again, proof of work means mining, to proof of stake, which is staking. I think people are going to use NVIDIA's less in that regard. And because of that, we might see a short-term drop in NVIDIA stock. I don't know if it'll hold down. I'm a pretty big bull of NVIDIA. I like NVIDIA a lot. But I do think that we might see a short-term fluctuation in that because of the ETH merge that's coming up, speculated to be around September, I think, for the ETH merge. All right, guys, so the earnings call is going to be in 2 minutes. We're going to stream the entire thing completely live as it happens. So be ready. Earnings call is going to be live in a second. Same with AMD. Yeah, NVIDIA will be fine as a company, I think, of course. I think NVIDIA has just got so many facets of their business that it doesn't matter, whether ETH, I think it doesn't matter what ETH does, but I do think it'll be a short-term, it'll hurt them short-term, the ETH merge, because just there's so many miners of ETH right now. I don't know. All right, so here's the earnings call coming up in less than a minute. We're going to play it live. All right, guys, earnings call is going to be live in about a minute. We're going to post it here. You're going to be able to listen to everything here. So hit that subscribe button if you haven't already. SPY pushing up a little bit. Snap holding over 12s. We're still holding our piece. We'll see if it continues. Again, earnings call is going to be in about 20, 30 seconds, I would say. All right, so here goes the actual Snap earnings call. So, hey, stick around. We're going to be listening to the entire earnings call. Hopefully it treats me right for this earnings call. We'll see. We go live every weekday, Kobe. Every weekday morning we go live. We trade 120,000 in buying power at the opening bell every day. We stream all the major earnings releases, and we don't sell anything. We don't charge for any of our content. It's all free. Everything we put out there is free. All right, guys. So let's see if the earnings call is actually live right now. Give me 1 second. Hasn't started yet. We're still waiting on the Snap earnings call. Snap at 12:08. Nothing yet. 12:07s right now for Snapchat. 12:07s. There's 12s right there. Nothing yet. Yeah, y'all hit that like button as well. Snap rug pull. Yeah, I bought the dip after the earnings were announced. All right, guys. Should be starting anytime now. We're checking it as we speak to see what's going to go down for this.
2022 earnings conference call.
There we go.
At this time, All
Can you hear
participants are in a
sound?
listen-only mode. I
Sound?
would now like to
Sound
turn the
check.
call over to David Ometer, Head of Investor Relations.
We're also going to put it in sub-only mode, but sound check.
Welcome to Snap's second quarter 2022 earnings conference call. With us today are Evan Spiegel, Chief Executive Officer and co-founder, Jeremy Gorman, Chief Business Officer, and Derek Anderson, Chief Financial Officer. Today, we published our inaugural investor letter on our investor relations website and with the SEC shortly after market close. The investor letter includes full details of our results, and we hope that you've had a chance to read it. Please also refer to our investor relations website at investor.snap.com to find today's press release, slides, and our updated investor presentation. This conference call includes forward-looking statements, which are based on our assumptions as of today. Actual results may differ materially from those expressed in these forward-looking statements, and we make no obligation to update our disclosures. For more information about factors that may cause actual results to differ materially from forward-looking statements, please refer to the press release we issued today, as well as risks described in our most recent Form 10-Q, particularly in the section titled Risk Factors. Today's call will include both GAAP and non-GAAP measures. Reconciliations between the two can be found in today's press release. Please note that when we discuss all of our expense figures, they will exclude stock-based compensation and related payroll taxes, as well as depreciation and amortization and non-recurring charges. Please refer to our filings with the SEC to understand how we calculate any of the metrics discussed on today's call. With that, I'd like to turn the call back over to the operator, who will begin our analyst Q&A session.
Thank you. We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star, then 2. In the interest of time, we ask that you please limit yourself to 1 question. After your initial question is asked, your line will be muted. At this time, we will pause momentarily to assemble our roster. The first question is from the line of Ross Sandler with Barclays. Please proceed.
Great. Maybe we could start with the macro environment. You stated in the letter that 3Q is roughly flattish thus far, and that's a pretty material slowdown from where you guys were 90 days ago, which I guess isn't surprising given kind of what's going on with the macro. So could you parse out for us which categories are slowing the most in your ad business? And you called out in the letter some high growth sectors cutting back. I assume you mean venture-backed startup type companies that buy ads on Snap. How big of a revenue bucket is that for you guys? And how does the trajectory there compare to the larger kind of Fortune 500 marketers on your platform? Thanks a lot.
Hey, Ross, it's Derek speaking, and thanks for the question. I think it's probably a good opportunity to step back and discuss how the overall demand environment is materializing. As you noted, we have seen a pretty good deceleration over the last 90 days. And as we noted in the shareholder letter, we've seen that across our DR and brand businesses, as well as a number of sectors. But over a longer trajectory here, we've observed a fairly steady deceleration in demand over the last year. The deceleration began with the platform policy changes implemented in Q3 of last year. Those policy changes upended a decade of advertising industry standards, and in turn, the models used to drive the direct response advertising business, as well as the tools used to measure the returns from that direct response advertising. And then beginning later in Q4 and certainly through the first half of this year, we've seen macroeconomic challenges that built. While there have been lingering supply chain and labor supply issues impacting certain segments that began during the pandemic, more recently, we've seen the impact of persistently high inflation, then rising interest rates and rising geopolitical risks associated with the war in Ukraine. Those macro headwinds have disrupted many of the industry segments that have been most critical to the growing demand for advertising solutions over prior years. We're seeing these various headwinds put pressure on the earnings of a wide variety of companies, and this is directly impacting the demand for advertising. Specifically, advertising spending in particular auction-driven direct response advertising is among the very few line items in a company's cost structure that they can reduce immediately in response to pressure on their top line or their input costs. As a result, as many industries and verticals have come under top line or input cost pressure, advertising spending has been amongst the first areas impacted. And to put a finer point on that, we've over time worked very hard to make it very easy for our clients to turn on advertising and to ramp their advertising. And that's been particularly good for our business as budgets have grown over time. But in a period where we're seeing headwinds, it's also very easy to turn off and very quick to turn off. So we see this dynamic within our business as advertisers have lowered their budgets and their bids per action to reflect their current willingness to pay. So for example, in some industries where top line growth may remain strong, but the businesses are experiencing input cost pressure due to inflation, we've observed reduced marketing spending and lower bids per action. And in certain other high growth sectors where businesses are seeing higher costs of capital, that's further reflected in their campaign budgets and their level of bids per action. So amid these various headwinds, we're also seeing increasing competition because the advertising dollars in aggregate are now growing more slowly, and that intensifies the competition we see. So because of these impacts from the platform policy changes and the macro environment and the competition all compound on one another, it can be difficult to sort of attribute the deceleration to any one factor. But in order to keep growing, we've got to stay focused on the inputs that we control. And that means investing to improve our direct response business, including our first and third party measurement solutions, as well as improve ranking and optimization. So hopefully that gives you a little broader context of how we're seeing the demand environment evolve and how that's translating into our business more recently.
Thank you. The next question is from the line of Brian Nowak with Morgan Stanley. Please proceed.
Thanks for taking my questions. Thanks for taking my questions. I have two. The first one, I appreciate the color around where we are sort of to start out 3Q being flattish. I know there's a lot of moving pieces around here, Derek, on the months and things. Just remind us how we should think about the monthly comps, July versus August versus September, and some of the platform changes impacting the year-on-year comp structure throughout this quarter. And then the second one, I thought the last answer was pretty helpful, but just walk us through philosophically in this type of macro environment, what do you have to execute on to really get the business back to growth? Do you have to add more advertisers? How do you get advertisers to expand ad budget? Like, what are sort of your key strategies you need to execute on to sort of get back to healthy growth the next 6 months for the platform?
Hey there, thanks for the question. I'll take both of those. First, as we enter Q3, a lot of the headwinds that I just talked about in the prior question, continue to be, as significant as they've been at any point recently. And it's not clear how those headwinds are going to evolve as we go through the quarter, whether they might abate or whether they may intensify. And one of the reasons for that is the point I mentioned near the end there, which is in particular how easy it is to ramp up spending on our platform and how flexible we've made it for folks to ramp down their spending. And so the reaction, within our business and our top line to a shift in those trends can be fairly rapid, and that makes the visibility forward looking particularly challenging. So given that, we believe the most prudent approach to giving folks some indication of what to expect going forward is to focus on providing transparency on how our business is performing right now and our plans to better position our business for long-term growth. So that sort of leads into your second question. And essentially, to return to a higher rate of long-term revenue growth, we're focused on three priorities. The first is investing in our products and our platforms to sustain the growth of our community, which has been very healthy. The second is investing heavily in our direct response advertising business, and we've articulated three key priorities there, including around investing in our first and third party measurement solutions, as well as continuing to make improvements in our optimization and ranking and product innovation. And then lastly, as we shared a little bit in the letter, we're focused on cultivating new sources of revenue that will help diversify our top line revenue over time. So we believe that if we can stay committed and focused on these priorities and combine that with our unique reach and rapid product innovation that we've demonstrated over a long period of time here, that provides us a path to regain momentum over time. So hopefully that gives you a little bit of helpful additional context in your questions. Thank you.
Thank you. Our next question is from the line of Rich Greenfield with Lightshed Partners. Please proceed.
Hi, thanks for taking the question. I'm going to struggle to keep it to one, but on page one, you called out growing competition for ad dollars on top of the slowing ad market. I'm curious how much of that is sort of directly tied to TikTok, which has been a monster in terms of its growth, versus sort of the two juggernauts that exist today in terms of Google and Facebook. Any color on sort of where that competition is coming from? And then I guess sort of related to this on time spent, is any of this people spending less time? And obviously relates to competition, but is this people spending less time on Snapchat every day, meaning less opportunities to monetize the user? Or is this just purely advertisers simply not spending as much as they were before? I'd be curious on both of those points.
Hey, Rich, it's Derek. I'll take the question. So, on the competition side, in terms of, monetization, we face a number of very large and very sophisticated competitors. So today we're seeing the overall advertising pie grow at a slower rate amid the macro headwinds I've mentioned earlier. So ad competition, whether it's with TikTok or any of the other very large sophisticated players in the space, has only intensified. So it's hard to disentangle the numerous factors here impacting what's clearly a headwind driving deceleration in our business. But definitely, as you see that pie grow at a slower rate and you've got lots of folks competing very intensely over it, you're going to see the competitive factor, be a bigger part of the overall discussion. And then in terms of what we're seeing on engagement and how that's translating to revenue, one, you're correct that the community in aggregate continues to grow at a healthy rate. And we've also seen time spent with content where we generate the majority of our revenue today growing, and that's reflected in the approximately 9% impression growth that we shared in the letter. The primary issue here is about how demand is materializing. And so, we've talked a little extensively about this already, but we've definitely seen the deceleration in demand as we've, first with the platform changes, then all of the macro issues that have compounded on top of that, which are really a significant factor at this point, and then the competition play into it. So I think from a perspective of seeing the growth materialize, this is really about the demand side of things. What we have to do is stay focused on the inputs that we control. And, that's around investing in our direct response business and making sure that we get improvements into our first and third party measurement solutions, as well as continuing to invest in improving optimization and ranking and personalization. And so certainly the continued growth of our community is going to help over the long term and is very important to the long-term health of the business. But then near term, this is about demand and us improving our direct response advertising tools to serve that demand for the long term. So hopefully that provides a little helpful context to those questions. Thank you.
Our next question is from the line of Eric Sheridan with Goldman Sachs. Please proceed.
Yeah, maybe I'll ask it as a two-parter. As you looked back over the last 2 years from when Apple first announced their policy changes and then implemented them a year ago, maybe talk a little bit about what your key learnings have been that you wish you had maybe done on a more accelerated timetable, or how you might have positioned the company differently looking backwards over the last 2 years. And putting a finer point on the three elements of how to build and scale the DR business from here, can you put some sense around how far along you are on those initiatives and the amount of investment capacity that might be needed to achieve them, and or a timetable in which to achieve them? Thanks.
Yeah, sure. Thanks for the question. This is Jeremy talking. So I think when you want to talk about the long term, I want to go back to what Derek was mentioning regarding our key priorities and where we're focused on growing the business. So in particular, focusing on our measurement strategies, as well as integrating with both third-party and first-party measurement solutions to get everything back on track. When you think of our advertising set more broadly, there are a litany of ways that they measure their advertising, including their own proprietary tools, and then of course our first-party privacy-centric tools, but then the third-party tools that they prefer. So continuing to optimize there, and then continuing to drive demand in categories where we have headwinds, I think are particularly important in that regard.
Thank you. Our next question is from the line of Lloyd Walmsley with UBS. Please proceed.
Thanks for taking the question. If I can ask two, I guess the first one would just be, as we think about the divergence in tone between the major ad agency holdcos that continue to sound relatively upbeat versus, what you guys are seeing. Do you think that that's just a function of them being a lagging indicator? Is it a different customer base? Is digital brand just easier to cut faster? Like, what do you think are some of the divergences you're seeing there? And, are their customers still spending at healthy rates with you guys, or maybe just moving budget? And then the second one would just be, as we think about moving through whatever form of downturn this is, coming out on the other side, do you think that the 50% top line growth ambition is still attainable in this kind of environment of increased competition and diluted ad performance, post ATT? Is it just going to be a tougher road structurally, or do you think 50% is still on the table on the other side of this trough here? Thanks.
Hi, this is Jeremy again. I will take the first part and then hand it over to Derek. We saw a lot of enthusiasm at Cannes as well, and a lot of really great reaction to our incredible augmented reality exhibit that we had there. But in general, kind of harkening back to what Derek just said earlier in the call, is that over the past few years, we've spent a lot of time removing friction from buying and selling on our platform. You alluded to this in your question in terms of it making, when it's easier to turn on, it's definitely easier to turn off. So as companies are reevaluating their priorities and their cost structure, they are looking at things like digital ad spend. It's easy to pause, reevaluate, and move forward there. So those same tools and services that make it easy to ramp up, make it easy to ramp down. And we know that our advertising partners are facing significant uncertainty. And we talked about that a few times, so I'll focus on the others. You mentioned this as well, but there is a pretty heavy selection bias for the kinds of team members and the types of clients that attend Cannes. We talk a lot about a balance between our DR business as well as our brand business. Large agencies as well as brands tend to be heavily represented at Cannes, whereas other companies like direct-to-consumer e-commerce, for instance, or app install are less represented at Cannes. So I think that's part of the divergence that you're seeing is, to your point, about them being kind of just a different mix of people that's less representative. And a lot of those brands that are bearing the brunt of these macro issues that we've talked about before, they aren't particularly well represented at Cannes. So I think that's what you're seeing there. But again, I think that one of the things that was really exciting for us and me personally being there was the excitement around the augmented reality advertising future. We had an exhibit with a lot of incredible brands there, and we're able to showcase our capabilities and believe that will have a long-term halo effect on the AR business, where we remain incredibly committed in addition to our resilient performance business.
And it's Derek, I can take the second part of that, which is, about the long-term growth prospects. I think, first it's important to step back and I think it's probably clear for all, but in order to achieve really elevated growth rates, we're going to need an operating environment that is more cooperative than the one that we're experiencing right now. Having stable platform policies that we can build and optimize against are really important, but having a macro environment where clients are able to invest and grow their marketing budgets is really important too. It's definitely easier to grow our top line in an environment where there are incremental budgets being deployed and we can capture incremental share, versus simply having to take share of the existing pie in order to grow. The key here is being focused on the inputs that we control and the things that are critical to long-term growth. We've articulated some of those in our letter. So, to be super clear, one is continuing the growth of our global community at a rapid pace. we already reach very deep penetration in many of the world's most attractive advertising markets, but continuing to deepen our engagement and our penetration of those advertising markets in the overall global community is input one. On the second is, as we've discussed earlier here today, is continuing to invest in our direct response business and improving that consistently over time. Number one, through improving our first and third party measurement solutions, and two, through better ranking and optimization that delivers better optimization for our advertising partners and therefore return on ad spend over time. And then three is really about continuing to cultivate new sources of revenue across our business. And there's lots of opportunity for that. Obviously, we have a number of screens in our application that are currently under monetized that present a lot of opportunity to grow over time, whether that's Spotlight or the camera that's very early in its monetization, or over the longer term, the map, and of course, the future of AR and many other formats. And of course, we've got other endeavors that are earlier in their going that could provide growth, including the recently launched Snapchat Plus. So continuing to invest in diversifying our top line growth to drive resiliency into our business and being well positioned for the long term is the key. And if we stay focused on those priorities, we believe we'll be well positioned over time.
Thank you. Our next question is from the line of Justin Post with Bank of America. Please proceed.
Great. You've talked a lot about measurement in both the letter and on the comments here. I guess the first question is, did measurement deteriorate in the quarter? Any changes from Apple or Google, either in the quarter or looking forward to the second half? And then second, when you look at the measurement opportunity, how would you say you do versus peers today? And what is the timing for starting to see real improvement there? Thank you.
Sure. Yeah, no problem. Hi, this is Jeremy. So we'll talk about the measurement tools here, particularly as it pertains to the peers. Thank you for the question. So there are a couple of things to keep in mind that measurement, targeting, optimization, and engagement all together are important for driving performance. And measurable performance in particular is what we have always been focused on. We still see a lot of headroom in improving our optimization and engagement, and we talked about that, and Derek just covered it as one of our core priorities. But I can give you an answer specifically to measurement in particular, which we have called out for a while, and this is where we're focused on our two key priorities. So as we talked about kind of over the last year, as platform changes have happened, driving adoption, utilization, and trust in our first-party privacy-preserving measurement solutions, such as estimated conversions, for example, is a key part of this journey. So near term, our focus is growing the adoption of those privacy-performing integration technologies, and those help feed both measurement and optimization, such as the conversions API that we've had for quite some time. And then from there, we have to focus on building trust in those estimated conversions. As I mentioned in one of my earlier answers, advertisers are playing around with new measurement as well, triangulating on first-party, third-party, and proprietary solutions. These statistically modeled conversions, when we're building trust, is these statistically modeled conversions can augment some of those third-party tools. An example of that would be Scan in a privacy-preserving manner and giving advertisers more information to act quickly. But in general, we believe that estimated conversions are going to become an increasingly important part of a privacy-centric advertising world, which feeds into the second measurement priority that we have, which is ensuring that our advertising performance is well represented in advertisers' preferred third-party measurement solutions. So that's what I mean by that is that this is a core component of building trust. So regardless of the impact of our advertising, if our first-party measurement tools are not in alignment with advertisers' preferred trusted third-party tools, we're still fighting an uphill battle. And those third-party tools across both web and app have been impacted by platform policy changes. This has been particularly acute for web-based advertisers and has led to an increase in a relative emphasis on same-session, last-click-based advertising, where we need to show that we are performant. We're still early in this journey. The platform policy changes, as you know, are an ever-evolving environment, but we do feel confident in our solutions and the opportunity ahead of us. We're going to focus on this problem holistically, and we believe that we're going to improve performance in parallel with how we're represented within third-party tools, so we get credit for the conversions that we do drive. In turn, that will drive trust in our first-party solutions, which will then enable us to focus on optimizing towards these privacy-safe, observable actions, and that will drive our advertising flywheel.
Thank you. Our next question is from Brent Thill with Jefferies. Please proceed.
Derek, can you talk to the trade-off to profitability and what are the steps you're taking as you highlight in the letter to emerge as a more focused company?
Hey, Brand, thanks for the question. First, I think it's clear our rate of revenue growth has slowed considerably, and we are acknowledging we must adapt our investment strategy accordingly. So first, we intend to substantially slow our rate of hiring to effectively pause growth in our headcount, which is a significant portion of our OpEx. In addition, we'll be looking at the rate of operating expense growth that is non-personnel related in order to stem the rate of growth in our overall operating expenses. The objective there being to get to a place where we can carve out a path to free cash flow break even or better, even at reduced rates of top line growth. As we implement these changes, we'll be reprioritizing our investments and driving renewed focus on productivity in particular. And in addition, we'll focus our go-forward investments around sustaining the investments we believe are most critical to capitalizing on the future of AR and executing on the priorities we articulated in the letter and that I've shared here today. We may incur some transition costs along the way as we execute on these changes, but we expect to emerge from all of that with a more focused cost structure as a result. So hopefully that gives you a sense of how we're thinking about it in terms of both a priority perspective and how to bring the growth in our OpEx and overall cost structure under control. Thanks for the question. I hope that provides some additional insight.
Thank you. Our next question comes from Mark Mahaney with Evercore. Please proceed.
Thanks. When you talk about diversifying your revenue streams, I think, Derek, you mentioned a couple of different areas, maps, Spotlight, et cetera. Could you triage those a little bit of those different areas? Which do you think has got the greatest potential to the least potential in terms of diversification? And then I want to get back to one macro question. In the script here, you talk about macroeconomic challenges that disrupted many of the industries that have been most critical to your advertising solutions. Is there a particular reason why the macro pressures would have impacted your advertiser base more than what would happen with other companies? Is there something about your advertiser base that may be more economically sensitive than what we would see in the general economy? Thank you.
Hey, Mark, it's Derek speaking. Thanks for the questions, and I'll jump in there on those. I think in terms of taking them in reverse order, your second question there around our composition of advertising and why it might be more or less challenging for us. I think first of all, it's difficult to know what the composition of other folks' businesses are. Certainly, we have a relatively lower exposure to small and medium-sized brick and mortar businesses. So that's part of the substance there. But I think more than anything, when you're thinking about us decelerating from what was a very rapid rate of growth to nearly flat or approximately flat growth currently, one of the challenges I think is particularly difficult is that it's much easier to gain share when budgets are growing and when investment levels are growing. And so it's easier to take share, whereas as we're seeing the overall advertising pie grow at a smaller rate, then that essentially intensifies the competition over that bit. And then the last thing that I would share just here in terms of the composition of revenue is that obviously we've shared previously that the significant majority of our revenue is direct response related. And as I've mentioned earlier, one of the things we've tried very hard to do on behalf of our advertising partners in recent years is to make it very easy to turn on and off direct response advertising and to scale that advertising very quickly. And so as our partners were able to grow their marketing budgets and grow their rates of investment, they were able to very easily and with very high return on investment scale their advertising with us. But that works in the opposite way when folks have to retrench their budgets and it's very easy to shrink down. And so to the extent that we maybe skew in those two ways differently than other folks, that might impact relative growth rates. And then over the long term, the question on where we see opportunity, one, I think we've got a significant amount of green space in the application. We've talked about that over recent years. One, we're still obviously have room to go on our content business that we monetize today, but Spotlight, is a relatively new product for us. We shared last quarter that we have begun testing monetization there. Certainly, we're excited about that opportunity over the long term and expect that we'll expand the testing there into the back half of the year, especially later in the year when that sort of inventory will be more helpful. Obviously, the long term, the most exciting opportunity is AR, and we're investing heavily around the future of AR to drive AR monetization and enterprise solutions for our AR partners, and we're very excited about that opportunity to contribute to the business over the long term. And of course, medium to long term is the map, and we're very excited about what we're seeing there on engagement. We share some stats in the letter and some of the engagement that we're driving around maps, and so those are all exciting avenues to expand monetization across our ad business. And then if you look further into other diversification opportunities that we've been discussing more recently, including the launch of Snapchat Plus, obviously a lot of opportunities here. Staying focused on our core priorities is going to be the key in order to execute on those and resume long-term growth. So hopefully that gives you a little bit of context to how we're thinking about it over the longer term.
Thank you. Our next question is from the line of Mark Shmulik with Bernstein. Please proceed.
Yes, hi. Derek, I know you mentioned a few times, I think the ability for Snap to grow as ad budgets grow. And I guess what I'm wondering is, in conversations with some of your core advertisers, how much of the impact that they're seeing to their ad budgets would you say are, transitory versus, real permanent rebasing in how they think about performance marketing and digital advertising spend?
Hi, thanks for the question. This is Jeremy. I can take this one. I think, we're looking at macro pressures from a litany of different angles. We're hearing of supply chain pressure, inflationary costs, of course, that are impacting unit economics as it pertains to moving products. They're getting pressure from the cost of capital, as we've talked about before, capital being more expensive as well as drying up in different areas. So, insofar as any of those are transitory, I think that's yet to play out in the overall macro. But what we're hearing from advertisers, I think more specifically as it pertains to advertising budgets, is what we said before, which is that they are taking this time, given all of those other macro pressures, to reevaluate their priorities, to ensure that they're making the right investments in the right places. And when we talk about digital advertising, it is the easiest thing to turn off. I know we've said that a couple different times, but I think it's important to reiterate here is that it is the most important thing to turn off, but it is also one of the most performant tools in their tool chest. So as things start to rebound for some of these advertisers in the areas where the macro pressures are a little bit more transitory, it's also the first thing to get turned back on. So we're remain optimistic that as things hopefully start to improve in the macro, that we can capture that opportunity by remaining focused on the three key priorities that we've articulated in the call earlier.
Thank you. Our next question is from Doug Anmuth with JP Morgan. Please proceed.
Thanks for taking the question. Just when you think about the new sources of revenue, you talked about some of the new surfaces, including Spotlight and camera and perhaps map further out. How do you think about balancing opening up more inventory there with what's essentially more of a demand problem near term? And then on a related question, can you just talk about Spotlight engagement and the extent to which you think it's incremental versus a shift for users within the platform? Thanks.
Hey there, it's Derek speaking. I can take the first one there. Just in terms of, from a very short-term perspective, I would say that the primary issue, as you've alluded, is about demand generation. So in the near term, very focused on demand generation. I think that opening up new sources of inventory and new sources of supply over time are really critical to the long-term growth and the long-term health of the business, which is why we're focused on continuing to invest in the growth of the community and continuing to invest in our content businesses and the map and, of course, our AR capabilities so that we can generate more effective inventory over time. And of course, as we're thinking about, ramping testing of monetization of Spotlight, of course, we think about the course of the year and where demand generation peaks over the course of the year. And so in the very near term, I think you're right that predominantly this is about demand. The extent to which incremental supply is going to be helpful is really over the medium and long term. And so fortunately, the healthy growth in the community and the healthy engagement we're seeing across our platform is really helpful to driving that long-term opportunity. And then in terms of, Spotlight versus, incremental versus, within the platform, when we look at content engagement, we're very focused on continuing to see people engaging with stories from their friends and family. That's one of the things that bring them into Discover and then helping them segue into additional entertaining content from Discover or Spotlight. We've been pleased to see the overall time spent watching content grew globally year over year. And of course, Spotlight itself also doing very well, growing 59% year over year on time, and MAU growing 46% year over year to reach more than 270 million. So certainly being able to grow the overall content engagement and then being able to grow Spotlight at accelerated rates, is encouraging for the overall engagement piece. But at the same time, we're still seeing Discover do very well, including generating, very wide viewership growth on users over the age of 25, which is exciting for growing and aging up with our community. So overall, as we step back and look at the service, we're particularly excited about the growth in our overall community. That's the key input to then driving people into each of our products, and having DAU up 18% year over year or 54 million is a great sign of health in the overall community, and then working people into our products from there is the key. So hopefully that gives a little bit more context, and thank you very much for the question.
This concludes our question and answer session, as well as Snap Inc.'s second quarter 2022 earnings conference call. Thank you for attending today's session. You may now disconnect.
All right, guys. Well, hey, y'all have a good day. Y'all don't forget to subscribe. We'll be back tomorrow morning live, bright and early, trading 120,000 in buying power as we do. Good luck. We'll see you guys tomorrow. Y'all be safe. If you're in Snapchat, I can't tell you what to do. Good luck. Hey, we'll see you guys tomorrow. Have a good day, team. Hit that subscribe button.